I would like to welcome everyone for being here today. Again, I will apologize if anyone heard the sentence I started with before I started, where I was on the microphone, but I don't know if I started this or not, but I know of an individual, and you will most likely hear of it tomorrow. 10,000 out of the money, 110 long call contracts. So his 95,000 you see there. 10,000, that's open interest. Where's the volume at? Why is that not up? Well, I guess that makes sense. You'd see 2,000, although you do have 11 right there. If that had not been there, you would have seen 2,900, which kind of falls more in line right there. That big group right there, I know of a gentleman who spent $100,000 on a directional block order of in the month of long call option expiration of May, 110 strike long call contracts. And his inside knowledge sucks. It just said, do you think he had some inside knowledge? I don't know what he had. But as I was taking a look, seeing his Apple will be $9 out of the money on those 110s tomorrow. Because, also it's at 104. It's going to be down another $9. What he spent roughly $1 a contract on tomorrow will be worth about 15 cents. How about, wow, what a bet. How about taking 100 grand and getting back $15,000 tomorrow? Mod, it does not expire until May 16th. I think stronger things happen. Yeah, his break even's only at $111, but but for that sentence laced with some profanities in there, he's toast. There's no way. Mod, just to put this into perspective, how many of you feel that the deck's stacked against you? So he's probably, if he chooses to say, hey, I'm going to hold on to it, it can turn around, watch them raise the interest rates tomorrow in the FOMC rate decision meeting, and watch freaking Apple go down to 92. Will I record? Let's record. If I haven't done it right now. I am recording. Thank you, Abraham. So, my expectation is Apple will go test 92 and find some support again. But wow, the poor person that that I knew that just blew at least 85,000 if he gets out tomorrow. So pardon my comment. It was interesting. As I went through, I had someone talk to me that said, Kevin, Apple sucks big time. And that's from a Hurley investment client. I did not realize that someone would take a fly on Apple. Kevin, if you know him, I will ask him, but I'm going to tell you the answer. He thought he knew something. He thought he heard something from someone online. He thought he had an edge. And again, the only person that might have an edge is really one of his senior partners for like a Goldman Sachs, a Morgan Stanley, a Charles Schwab. Maybe Buffett has a little bit of possible inside knowledge, obviously. But for those of you that think you got $3 or $4 million, to make a, geez, I don't know what to say. In fact, I said it all, and it had a couple choice words in there. I don't know what else to say, nor am I going to say anything. But 186 S&P 500 earnings are on this week. Obviously, some big names were today, and all seem to disappoint. Which ones am I talking about? We have Wynn, we have Twitter, we have Apple. What else was, well, there's quite a few that wasn't good today. I guess I know more than that, but wow is all I can say. Wow, when I hear what someone just did to the tune of freaking hundreds of thousands of dollars, I don't know what to say. I think he needs an education, right? I think that's money I could have traded for him and done amazingly. Buffalo Wild Wings was one. I don't know how eBay did, although I can take a quick peek. So Twitter tanked. Buffalo Wild Wings, Apple, Chipotle Mexican Grill ate it today. eBay was up, actually. At least it looks like. Panera Bread was up 2%, so I guess not all of them, but man alive, I don't know what to say. What I do know is, well, a lot of people ask me, well, Kevin, how did you protect? What did you do? And yes, I am looking to leave Apple this year. I went with a more standard collar trade where I paid for some 105 puts. I have some 120 calls. My cost is about $2. And I guess I'm going to make up at least about 75% of the downward movement looking at the deltas. These deltas are going to change dramatically. I will not make up dollar for dollar. In fact, I understood Jeffrey had, 1.5 puts on an exploding collar trade. If you did an exploding collar trade, you will be sitting nicely. The combinations down here are not mine. That's actually a client's that's messing around. Oops, not a good one to have there. Wow. Wow is all I can say. I am, I'm in shock. But obviously, Apple has had some bad earnings. The good news, if you can look for anything, the futures are only down 33 points, but the NASDAQ futures are down 42. So if we were to sit here and go, worst comes to worst, right? Right now, Dow Jones, futures for the Dow Jones Industrial Average are down 33. The SP, I touched it. The S&P, let's just do it that way. S&P futures are down 4.25, and the NASDAQ futures are down 42.25. Wow. Maud makes a comment. I think that shows the central banks is pointing the market, busy earnings, busy economy, and almost the highs of the markets. Yeah, I mean, it was funny money. Maud, you made that comment, so I'm going to go ahead and I'm going to I'm going to agree 100%, but I'm going to give you the reason why. A busy economy, a lousy economy, busy earnings. Appreciate Michael grabbing this one for me. Give me a second to get my internet here. I'm actually in a downtown office today. All right. Maud made the comment, it seems like our market's being propped up. And without a doubt, I'm going to agree 100%. Without a doubt, no questions asked. Is our market being propped up? Well, I'm going to kind of grab what you said there. So, Maud made the comment. And just to agree 100%, I'm going to bring open a chart that'll show you just how loaded our economy is based on everything that the Fed did. And it comes down to the simple chart I'm going to show you is the S&P 500. Come on, open it up. Why is this not working for me? Well, Maud, I agree with you. I'm gonna get this eventually here, but I am going to show you earnings projections over actual earnings over the last 4 years for the S&P 500, and we have had negative earnings growth year over year, literally for the last for the last 4 years running. It's ridiculous. It's yes, we have been propped up, and there's plenty of examples to show you. But obviously the government has propped up our economy with trillions and trillions and trillions of dollars, whether it's QE, whether it's bond. I mean, yeah, there's a ridiculous amount of things that you can point to. But the short answer is yes. We have been propped up. I'm trying to get a little chart open that'll show this, and it is ridiculous. So we're going to wait for this to come on through. When it comes on through, I'll bring it open. But to keep a long story short here, we're in trouble. Our economy's in trouble, even if it is the best house on the block. We're in trouble. So the comment was made, how does it end? I'm not sure I have a good answer on how it ends. The reality is it can't be that great, but we haven't been in this position. No one's been in this position. We are in some all-time news, some all-time firsts. We're in places that living people have never seen in our lifetime. And because of that, we don't have good answers on how it ends, what we're going to do different, how we're going to change it. We don't know. There's no answer to give you that's going to be a good answer as to what's happening and why. So we don't know how it's going to end, but it can't end well for those countries who are so in debt that the revenues barely cover the interest owed on the debt. We know that much, right? The short answer is that's what we know. Apple. If you go through Apple's earnings, not horrible, right? $1.90 versus an estimated $2 per share earnings. So, out of curiosity, if you miss by a dime, bad, good, what do you think? If you miss by a dime, is that bad, good? Does it matter? What do you think? Well, apparently bad. Let's figure out why. Why is that apparently bad? Kevin, it's only a dime. It's only a dime on what? What is it only a dime on? A dime on 5%. Okay, Abraham, I'm not sure I'm... oh, it's only a 5% miss, right? But it's only a dime, but it's a dime on what? And I think that's where some of us sit and we look at it and we go, I don't know where you're going at with this. What if I brought in some key statistics on Apple and said, you know what, it's only a dime on and or multiplied by the outstanding shares, right? So it's only a dime, but it's a dime on what? The problem is the bad perspective ahead, and we're going to get into that in a minute. But it's only a dime on what? It's only a dime on 5.54 billion shares. So if we take and we quantify this out, 5.54 billion, right? I think it goes at times 0.10. Wow. So if I'm quantifying this, it literally is a miss on earnings by about $277 million. But Kevin, if you take a peek at the revenues, their diluted share revenues, which is a little different response here. Kevin, their diluted share revenues I'm going to put that in there. Total revenues. All right, let's give Word a second. But their diluted share revenues were $50.56 billion in revenue. The street wanted 5.197. So there's 150 of that $277 million miss here. So is maybe my chart opening up? It's trying to. Man, I'm sorry guys. I need to find me a new computer. What's happening is all the times I clicked on that Word document to open it up, I'm paying for it now. So, diluted share revenues came in, as I was saying, I've got it written down here, at 50.56 versus an estimated expected 51.97. I'm not sure if these are GAAP or non-GAAP, but that 10% earnings miss, or that 10-cent earnings miss on outstanding shares equals about $277 million. And whether it's GAAP or non-GAAP, diluted share, however you want to justify it, you can see the revenues here missed by roughly 140 million just in the diluted share revenue totals. Was there any good news? Well, they sold 10.25 million iPads versus an estimated 10.1 million. They sold 4 million Macs, not bad. They had 6 billion in the services sector, which that equals iWatches and iPay. iPhones, 51.2 million versus an estimated average of 50.3. So doing pretty good there. The big crush was next quarter as they prepare for the iPhone 6, right? iPhone 7. Come on, Kevin, get your stuff together. Came in at 41 to 43 billion in revenue versus an estimated 47 billion. I had a very interesting talk with Jeffrey. And my talk with Jeffrey was, well, I'm done with Apple. Well, I can't say I'm done with Apple. You know, it's only this, it's only that. I'm done with Apple. I just can't be done with it right now. I'm not in a position to be done with it where I can get completely out because of its past history. So I'm going to take a quick peek and see if I can't answer Maud's question here. Question was, I think we're in a lousy market. I think we're even in worse than a lousy market. And here's your worry or your proof. I have a gentleman that works for me. He's out in Mississippi. And here are the S&P earnings versus the growth in the S&P. Taking a quick peek at this chart, if I can pull it down, the S&P was flat. Nope. It actually went up in 2013, went up in 2014, and now we have had 6 decreasing quarters where literally you can pull up a chart and you have 3.5, if not 4 years of zero earnings growth on the S&P 500. Yet you had the stock market on the S&P go up almost 50%. How do you justify a 50% increase in the value of the S&P 500 with zero real earnings growth? It can't be done. Another comment. Please comment on Apple's dividends and dividend yield. Sure, let's go ahead and let's go through this. Apple will give an increase of 50 billion. And how do they warn it? Defined it as 50 billion in capital retention. Increase of 50 and capital give back, right? Which just means dividends and stock buybacks. Question is, what about the dividend yield? And I'm gonna comment on this. When the stock performs poorly, your dividend yield increases because the stock loses value. Example, %4 yield on $100 equals $4. When the stock loses, and let's go ahead, loses 10%, the yield is now different. $4 divided by a new $90 stock price equals, taking my calculator, $4 divided by 90 equals a 4.4% yield now on the same real dollar dividend amount. So guess what? Apple's dividend yield is going higher. Maybe it will pay a 4% dividend. Not a chance. But the dividend yield will go higher as the stock loses value. It's kind of interesting because the synopsis is, hey, a stock with a dividend yield of 4% means that the stock has lost value and it should now be a buying opportunity. You want to know one of the biggest / dumbest amateurish investing comments I've ever heard is? Does anyone want to hear this one? Anyone want to hear one of those dumb investing comments? Well, Kevin, I've got an MLP. I've got an ETF. I've got a dividend yield of 7.85%. I've got a dividend yield of 11%. Linko, Line Energy, there's a great example. When those dividends go above that 4% range, and you start to get these high single digit, low double digits, that's a huge red flag for, let's get some dumb people to pile in before we get the hell out of business. An ideal dividend yield is 4%, meaning that the stock has fallen in price. If you have a dividend yield of 4%, the stock should then go higher to a 2.5 to 2.75 to maybe a 2.19 S&P average dividend yield. It's all I can say to bite my tongue for some people that come and tell me, well, Kevin, you don't know diddly, because I've got a 7.85% dividend yield or 11% dividend yield in Line Energy, or in some stupid S&P ETF, blah, 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 blah. What I do know is when I take a look, and yes, I have been in Line Energy in the past, I wish these guys could have come back. But I don't give a flying flip about a 10% dividend yield when your stock price does this. Come on. Guys, I am sorry my internet is just garbage today. So check that out. Out of curiosity, with a chart that looks like that, $27.45 down to a 35-cent stock price. Do you give a crap about a 10% yield or a 20% yield on a stock price action like that? The comment was made, what do I think of crude oil and energy? It's in trouble. We were looking for $60 to $75 a barrel in 2017. If that's true, you wouldn't have seen ExxonMobil get their credit rating cut for the first time below a AAA rating down to a AA rating, and the first time since, I think it was 1977 was what I heard on CNBC today. Or maybe it was Bloomberg. I can't remember which one I heard it on. I know as you look to earnings on Friday on Chevron and ExxonMobil, you'll find out how bad it is. I'm in the camp that hopefully, because I use gasoline, I hope oil prices don't go up till 2020. And there's some calls that oil pricing won't get back up to $60 to $75 a barrel till 2023. Would I be investing in oil right now? Definitely not. I'm going to stay away from it as long as I can. We're going to get hit tomorrow. We're going to get hit hit pretty big. And it's nothing more than, I'm going to just move to the charts because that's going to be easiest. It's nothing more than looking at the charts. We have a doji today, but the honest truth is there's too much uncertainty coming up in the future. There's too much uncertainty that our markets have to take a pause. Technically looking, we might as well just get right back to where I'm going to go to. Look at what comes out before the market tomorrow. Bank of Japan announcement, all industry index, unemployment rate. It's all about Japan tomorrow. But don't forget, on Wednesday we have an FOMC rate decision. Guess what? Markets won't move tomorrow till 2 to 2:15 Eastern Standard Time. We don't have a reason to move. We're lacking a catalyst. In simple English, it sure as hell isn't earnings. Dang it. Come on, earnings. Looking at a chart. 15,500 up to 18, up to 17,990. Technically speaking, we're bullish, but with the run, what is the expectation? Janet will save the day by not doing anything? Maybe, but what's the expectation here? Interest rate hike, that doesn't save the day. That makes things worse and more expensive for everyone. Looking at the chart, what would you expect after this type of run? Pullback. Bingo. It's pullback time. Do we need to test the lows? I don't think so. But we are in the sell in May, go away type of scenario. Taking a look at the S&P 500. Ditto. Taking a look at the NASDAQ. bullish just by a bit, but heading down tomorrow, most likely. When you take a look at what's going on this week, I'll be honest with you, I think our numbers suck. New home sales with very little inventory, so this should be going gangbusters. Worse than expected. Durable goods came in at a positive 0.8 with more revisions from last month lower versus an estimated 1.7. I'm not sure we're going to hit a 1 GDP in the second quarter. Durable goods, X the transportation numbers where we can't count those big Boeing orders, right? Came in at a negative 0.2 versus an estimated positive 0.5. Case-Shiller home prices, 5.4 drop versus an estimated 5.4 gain versus an estimated 5.6. Consumer confidence getting beat to hell, most likely because of the politics and the political debates and primaries that we're going through. We were at 101.2 not too long ago. $94.2 versus an estimated 96.2 when we were at a 101. So, the comment was just made, and yet the market goes up. It has. Nice cup and handle. I really liked our chart pattern. Fabulous chart pattern. It's a W cup. There's your handle. Here's where we're supposed to go off to the races. With all due respect, I'm seeing a sell in May go away, which is unfortunate because I think we've had some stocks have some really good earnings. World market end the week. We're cutting it close. And what I mean by that is I thought I was looking at a 2.5%. Okay, I'm getting ahead of myself. I got so many thoughts going through my head. I'm getting ahead of myself. I thought that we would see year to date, no, let me take that back, month to date, I was looking at about a 2.5 S&P return. And I see a 1 month return right now sitting at a 2.74, but that takes in the last week of March there. World markets end, I'm just going to say down 1% from here. I still put in my comments that I am expecting the S&P is going to end at a 2.5 April. I'm really close. I might just have to a 2.0. We're there. We're close to being there right now. But it's tight. It's tight. We get a little bit of a gain. So my 2.5, I might nail my 2.5 right on the nose. Tons of earnings. Earnings that I'm paying attention to, I'm just going to let you know. They're usually at the end because I put them on at the end. Apple and Win were the ones I was looking at along with FCX. We've got Boeing, Facebook, Celldex, and PayPal tomorrow. We have Baidu and Ford are big ones for me on Thursday. I don't actively trade them, but I'm paying attention to Chevron and ExxonMobil. That'll be our bellwethers for the most part. Although the neat thing is, even with all of these, because we have 186 companies that have earnings, there's not really a bellwether, including Apple, including Chipotle Mexican Grill. There's not truly a bellwether that'll pull the whole market down. As for the rest of the week, obviously GDP on Thursday, we'll see just how bad we are. Personal income, personal spending will be important as well as Michigan sentiment on Friday. Big mover though, FOMC rate decision tomorrow, and all of Japan's announcements tomorrow as well. Expectations, Japan will continue to do more easing, maybe go even more into negative rates where no banks will want to hold any money. Friday, you have the European Monetary Union and France's GDP. You'll have Germany's retail sales, and the EMU has their inflation numbers out on Friday. How am I looking to trade? I'm prepared for earnings. For the first time today, I rolled protection on Disney. To 105 June strike from the 97.50 June strike, and it cost right in that range of 285, I'm pretty sure. Rolled forward. So I've gotten to where I'm a little bit queasy about where we're going, so I'm going to go ahead and get my protection on. Guys, I know I ranted and raved a little bit today. I've got some very interesting commentary on Visa and Apple, since that's what was moving. But what questions do you guys have that I can answer? Thank you for my rant. I felt really good ranting and raving, but there's sometimes you just look at the stock market and you just want to say, really? Really? That's what you're giving me? Really? And of course, you know the answer. It's like, yeah, it is what it is, Hurley. What questions do you guys have, if any? Or what comments do you want to bring up that's going to make me feel better? We'll do it that way. Questions you have, comments you have. Thank goodness we call our trade. It's a smart way to be in the stock market always. Where your rut is heading has been strong recently. You know, I usually only trade the rut. In the past, it's only been that first quarter. I'll go and I'll buy a June long call, a directional trade, and I'll play the rut for the first quarter because historically the rut has a pretty good run. V-shaped last quarter, V-shaped first quarter. You made some money in first quarter 2013. The rut's not really up for the year. It's just been a recovery just like you'd see on the S&P 500. Everything but really, in my opinion, the NASDAQ has that double bottom for the year, a pullback. Let's see if I'm wrong about the NASDAQ. No, same thing. So the fact of the matter is, we had a 10% pullback, not a 20% correction. I wonder if we could even see it on the diamonds. I bet we could. Crying out loud. My computer's going to get thrown into the ocean at this rate. Same V shape. So, yeah, Steve, I wouldn't put much effort or thought process in the ruts. Here you've asked a simple question. Yes, they're up higher, but no, they are not a precursor that looks anything different than any of the other major indexes. It's that same W-shaped recovery for more or less zero gain for the year. So, pretty interesting. You can try to play something like that directional, or you can use it as an opportunity to pick up more shares and play a return towards the end of the year. But I would not put I wouldn't put a whole lot of faith in the Russell 2000. It just doesn't do it for me. Technically not up for the year. Technically bouncing off of an overbought condition. But it's a great, thank you for bringing something different to look at into the conversation. And it's interesting. I had someone back in the day brought to me the wasn't the Keltner channels. It was on balance volume is what it was. And it's funny because the on balance volume taught me nothing more than what I got from my Williams percent R. And I couldn't find the correlation as I tried every which way to spend some time on balance volume. I just couldn't see it in the same way or shape they were. And it was interesting because it killed them. Of course, you don't have on balance volume there. I'm curious, let's pull up something like Apple. I found it rather interesting. So I guess where I'm going at with this comment is you don't necessarily, I would spend less time trying to find something new that's going to work, and I would spend more time using what's worked in the past. And obviously, I'd like someone here to remind me. I'm going to have a quick call, and I'm going to have a quick chat with this individual. Hopefully, I won't let their name slip here, but I'm going to try to find out what the reasoning was that he felt he could take a $100,000. And again, in all honesty, that's only 2.5% of his portfolio. But that still seems like a ridiculous bet to go put on for nothing. Shocking. I'm shocked that before the close today, you'd go put $10,001 out of the money, May, $110 long call strike contracts in. It's insane. So if I sound like I have an edge to my voice, it's because I can't believe I actually know someone that's done that. Saw the volume today. He was the volume. I'm anxious to hear what's said on CNBC or Bloomberg tomorrow about the individual that did that. Any other questions? Any other questions you guys have? As I'm sitting here shocked. I'm beyond shocked. Where's the opportunities you see? Abraham, new opportunities. That is a very interesting question because I don't see a whole lot of new opportunities. I'm kind of going with my same olds. New opportunities, I think we have some great potential in China. If you look at a chart on Baidu, I've enjoyed playing Baidu through summer months because it seems like it has some increase. It captures the Chinese New Year, and it runs into summer where it's not a sell and may go away opportunity. So I've enjoyed playing Baidu as a sell in May summer growth opportunity. And it's not exactly perfect. You can pull up a chart and go, Kevin, you're crazy. And part of me would go, yeah, maybe you don't see it the same way I do. But I've had a lot of opportunity on Baidu to play it into my summer months, and I've used it to offset the sell in May and go away or the drop in the U.S. economies. And it's not always perfect, but I'm going to go ahead. I'm going to use last year. Pretty neat to see the uptick, the downtick, and the uptick, and then a big drop. My July stops right here, so I saw the move in probably May through June, collared it. July we had a run up through August, collared it. Those were two good moves that made a lot of my year for me. April through August 2014, nice run. April through July, little run, and then July in through the end of the year. Great run 2013. 2012, ran the other way. Down, but that bounce back up saved me. Really V-shaped in 2011. But I've used Baidu in the past to be my anti-sell and may go away, where I can make some good money on the Chinese Google or on the Chinese markets to offset the doldrums that we go through in the summer. So Abraham, just some food for thought. You might see it in automotive. GM has made the comment Ford with cars again at an all-time high for years on the road, approaching 11 and change. There seems to be a rotation into some new cars as people have felt better. Don't know if that will stay that way, but you might see some rotation into the automotive industry for some growth. What about BABA? That's interesting. BABA doesn't have a track record for me to follow. With that said, do I have some people in BABA? There are 4 of us that are playing BABA. BABA still sucks on a relative poor level. Still not at the IPO price. It's a great caller, but you don't have enough information on BABA. Do I wish I would be able to talk some people out of getting in October and getting in, out of getting in October of 2014 and getting in more in October of 2015? Yes, I do. But it has been a pretty good caller trade. 500 shares of BABA should at least be, well, let me pull one up. 500 shares of Alibaba, I'm hoping is 1,000 shares today. So let me take a quick peek. Guys, what's going to save me this year, I really am looking for Ford and Disney and Baidu. Those are the 3. They're going to put me significantly higher in beating the S&P 500 for the middle of the year. Those will be the stocks that will move me higher and have me beating the S&P 500. Will be the earnings from Ford, Disney, and Baidu. Abraham, give me a quick second. I'm pulling up an account to see where we sit with Alibaba. Got a couple of them in here I can pull from. So it's not that Alibaba is less interesting, Abraham. It's just unproven. And when it's unproven, I'm not as likely to feel comfortable jumping into it. Yep, 1,000. So, 500 shares has turned into 1,000 over the year and a bit, but because it's unproven, no track record, you typically want to wait really 3 to 4 earnings and get in from there. See where you're going to be and see if it's a good, if it's a decent company. Any other questions you guys have? Next earnings, my birthday, 5/5 before the market opens. All right, if there are no other questions, I want to thank everyone for being here today. I appreciate your help and your time. Hopefully some of this is helpful to just take a second look at another opinion of what's going on. I will have this posted up this evening so you can grab it online. I appreciate your time, guys, and if no other questions come in, I will talk to you again next week. No, maybe I won't talk to you again next week. When am I not talking to you again? I'm talking to you again next week, but it's the week after. Nope. What am I doing? You'd think I'd know by now, huh? I'm talking to you again next week, but 2 weeks I will be gone. I'll be traveling. I'll be off. All right. Appreciate your time. Good session. Well, thank you. Again, I do apologize for anything that might have slipped out at the beginning that you guys shouldn't have heard. And you guys take care. Have a wonderful week. Look to pick up more shares of Apple, and I'll talk to you again next week. Bye-bye.